In this video, guys, we're going to look at what do investment banks do. Stay tuned. Hey traders, warm welcome to you. Okay, so investment banks have really got a bit of a bad rap, right? 2008, they were seen as the big bad guys, and I'm not here to have that discussion. I just want to put down some of the things that investment banks do, because I think a lot of people kind of confuse banking and put it all into one big kind of pot of the same kind of thing, and ultimately it's completely different. You know, if you go down to your local high street bank, what they're offering you, mortgages, savings, loans, current accounts, all that kind of stuff is completely different. It's public facing, it's a public kind of bank, but the investment bank is a completely different animal. So in this video, just going to outline just some of the things that these guys do at investment banks so we can get our head around it a little bit more, what's going on in that world. And they're not very, very public with what they do. They don't need to be. They deal predominantly with businesses and companies and the markets. We don't generally see what goes on, unlike when we go into a branch of our local high street bank. So, sometimes we don't really know what's going on behind closed doors. What are all these departments doing? So anyway, investment bank, one of the main things they do is helping companies access capital, whether that's helping them out with an IPO, so whether they're floating on the stock market, whether they're raising debt to finance something via a bond or whatever it may be. So say you've got a big company and you want to borrow, let's say you want to borrow 500 million to build a new piece of machinery, or $1 billion to build a factory, whatever it may be, and you're a good company making lots of money. You'll go to an investment bank and say, hey, can you make this happen? In other words, I want to issue bonds on my company, I want to raise this amount of money, can you do all the paperwork, can you do it? And they do it all for you, because obviously there's a lot of regulatory stuff involved in that. They've got to access investors, they've got to go out and find the people who are prepared to part with money in exchange for what you're going to give them in return. So that's their job, that's what they do, they go out and do that deal. So other things they might do is they solve kind of problems, and I've got to be careful saying this, because they weren't possibly, the argument could be that they solved problems too well, in inverted commas, in 2008, because they solved the problem of packaging up all those mortgages into big packages and slipping in some subprime in there, and they made these subprime mortgages that were ninja loans, no income, no job, no asset. You know the story. So they could argue that they're solving problems too well, and of course that's a separate topic, right? Should they be regulated heavily to stop that? That's a separate argument. But the point is, they do solve problems. They're trying to help capital flow. And yes, they've got a bit of an image of being greedy from time to time, but they are there to make money, but they're there to help other companies make money as well. They're trying to get the money flowing, and they use innovative ways to do that. So, like Berkshire Hathaway ages ago, they came up with something where they would split the stock, but the voting rights were like a 200th or something. The stock split was a 50th or something like that. You guys will have to Google it, but just off the top of my head here. So it allowed people, because the stock was so expensive, people couldn't buy it, but it allowed people to buy it, smaller investors to buy it, creating a bit more demand for the stock, but without diluting the shareholders' voting rights. And so they came up with this really useful structure, potentially, so that Warren Buffett would still be happy with doing that, because he didn't want to do the share split. So they solve problems. They solve problems with creating money and sort of unchoking, unthrottling money flow. Number three, of course, mergers and acquisitions. This is more front office kind of stuff. If one company wants to buy another company, they will help that happen. Whatever needs to be done to do that, whatever paperwork needs to be done, whoever needs to be spoken to, they will be the facilitator for that. And merchant banking. This is just basically where the bank will invest money, private equity ultimately, instead of buying shares in something, will invest in a company and say, I want X% of that company. So just as an investor would do buying stock, these investment banks are saying, hey, you know what, that company is doing really well, we will buy into that, we'll buy X percentage of the company and we'll give you X back. Just kind of Dragon's Den, if you like, on a bigger scale. Middle office. So some of these are a little bit more back office depending. Compliance, middle office kind of thing, making sure everyone's doing what they should be doing, with departments with the government's insurance, etc. Trading, power control. So this sometimes is back office depending on what bank you're talking about. But trading, power control, in other words, the flow of money throughout the bank, who has what assets, how we allocate capital, where they choke capital off, who has what capital, and all that kind of stuff. Now, back office is considered a bit more boring. It's documents, it's clearing trades that have come through. If they've been making trades, it's all the kind of paperwork that needs to be done, so to speak. It's obviously most of it's digital now. Trade confirmations, clearing, all the kind of stuff that's just basically saying, I need to reconcile this with this, and make sure it all fits as it should be. And this was, you know, when we look back on the crisis, it was kind of what was missing. And also, if you look back on, probably better to look back on the Nick Leeson kind of thing. If you remember the Barings Bank, I've done a video on this, talking about how Nick Leeson brought down Barings, or what we know of it anyway. That was when the back office really didn't know what was going on in the front office. So Nick was doing a lot of these deals, but he was spoofing and committing fraud, wasn't he? His statements, so the back office kept giving him money, allocating him capital, and he just kind of kept these guys out of the loop. But obviously regulation now has hopefully stopped anything like that happening again. So IPOs, we talked about that. Raising debts, if a company wants to raise debt, we talked about that one. Insuring bonds, issue credit default swaps, stuff like that. And of course, the big one, which is reduced a lot more now, is ring fencing and so many different things that are going on regulation-wise. But ultimately, prop trading, if they believe the price of crude oil is going up, they will buy some crude oil. Now, we know that is shrinking a lot with these investment banks. Now they're focusing more on their main kind of offering, but there are still little chunks of them there, and they're still making money doing prop trading and making these deals and doing just general speculation on the markets based on their analysis. And of course, we've got loads of other stuff in there. I've just put some down there. We've got an analysis team that will write down and do lots of analysis and research on companies, on markets, on economies, on currencies, and all that stuff, and they use that internally to make decisions. They will give it to select clients. You know the score. Sometimes you see this kind of come through from Goldman or Merrill, whatever it may be, research reports. So there's a big team doing that. These guys ultimately are there to help the flow of capital, to free up the flow of capital, to provide the contacts, the networks, to allow companies to grow, and really to facilitate an economy pushing on. Without them, the economy would probably not get very far. But of course, there is the argument to be had that they need some regulation on them, which is obviously what's coming now. So that's not the point of the video. It's not about arguing for or against them, just to highlight some of the things that they do. Anyway, guys, that is what is an investment bank, a bit different from the high street stuff. Take care. See you in the next one. Bye-bye.